Hello there. As you have already seen from the title, we will discuss the difference between Takaful and conventional insurance. But first, let me introduce myself. I am Hilary Andy, a student from Queen's College pursuing a diploma in Islamic finance and banking course. I am accompanied by two of my friends who are also taking the same course.
Hi. I am Hafiza Nu'ain.
Am Wafiuddin bin Ramley.
Alright. Let's continue.
Now, before we go to the main topic, we first should know what is Takaful and insurance in general. Takaful is a type of Islamic insurance wherein members contribute money into a pool system to guarantee each other against loss or damage. Takaful branded insurance is based on Sharia or Islamic religious law, which explains how individuals are responsible to cooperate and protect one another. Takaful policies cover health, life, and general insurance needs. It was introduced as an alternative to those in the commercial insurances industry, which are believed to go against Islamic restrictions on riba, interest, al-maisir, gambling, and al-gharar, uncertainty, principles all of which are outlawed in Sharia. Insurance, on the other hand, is a contract represented by a policy, in which an individual or entity receives financial protection or reimbursement against losses from an insurance company. The company pools clients' risks to make payments more affordable for the insured. Insurance policies are used to hedge against the risk of financial losses, both big and small, that may result from damage to the insured or her property, or from liability for damage or injury caused to a third party.
Based on the definition of Takaful and insurance that have been given by Wafiuddin, we could say that essentially, both Takaful and conventional insurance serve the same purpose of providing coverage. However, there are major differences between the two. The first and most basic difference between the two is intention. What is the intention of a person when he wants to participate in Takaful or insurance? In Takaful, an individual enters into a contract to provide funds that potentially facilitate those experiencing an unpleasant situation. Instead, a conventional insurance policy is purchased as personal financial security for a person. Next is in terms of investment. Investment is one of the ways for these institutions to earn income on their services. The money used for investment is from the contributions paid by the participants in a policy they participated in. Conventional insurance investment units will invest based on their assessment of what fits their profile. Unlike conventional, Takaful investments will follow strict ethics. Takaful cannot invest in things that have a gambling basis, ambiguity, or carry out money lending with high interest rates.
Okay. Anything else?
Yes. A difference is in term of return. Suppose there is extra money for low claim rates by insurers under Takaful. If so, it will be distributed to participants, while the profits from investments will be distributed to both participants and shareholders. Takaful operators make money through performance fees or by sharing the surplus. But the total amount of payment from the surplus that Takaful operators get cannot exceed the amount that is paid to Takaful participants. On the other hand, under conventional insurance, extra money and profits belong to the shareholders of the insurance companies. The last one will be the differences in how the institutions deal with risk. In conventional insurance, the risk transfers between the policyholders and the company. It means that the insurance company acts as a risk taker. For Takaful, the risk is shared among the policyholders, and the Takaful operator will act as a risk manager that helps to manage and minimize the risk.
The conclusion we can draw here is that Takaful is not a brand new concept, it has been around for centuries. The Takaful business allows policyholders to enjoy the benefits of a shared structure in a shareholder wrapper. The Takaful business also has an explicit ethical structure that can be marketed to Muslims and non-Muslims. While the conventional and Takaful business generates profits for the shareholders, in the Takaful business the expenses paid to the shareholders are clearly found. In conventional insurance, they are not necessarily so. The Takaful industry adopts the concept of cooperation, protection, and help between each participant who wants protection in the face of possible disaster or catastrophe. Efforts to establish cooperation and assistance in line with the demands of Islam as explained in the Quran.
Alright. That is all for this video. Don't forget to hit the like button. Thank you for your time, and see you next time. Goodbye.